What's up everybody, Jaspreet Singh here, and the last few days have been absolutely crazy in the market because first the Fed raised interest rates and then the stock market rallied by 1,000 points. Then the very next day the stock market fell by more than 1,000 points. And then we saw Bitcoin crash by like 10% in one day, and we saw the stock market fall hard and then begin to recover a little bit. So there's been a lot of uncertainty, craziness. Even Morgan Stanley came out just recently and they said that we are going to enter a bear market, meaning a downward stock market. So people and investors need to get prepared. So what I want to do today, because of all this craziness and the comments that I've been getting, I want to go over 4 things, and I wrote these down so I don't forget. I want to go over what's going on with the stock market and a potential recession. Is this the recession that everybody keeps talking about? Second, I want to go over what you should be doing in the market right now. Third, I want to go over what's coming in the economy. And fourth, I want to go over how you can prepare for what might be coming. So let's start with number 1, talking about this potential recession and the stock market, this potential bear market. A recession, by definition, is when you see 2 quarters of GDP or economic slowdown. So that is an economic term versus a stock market crash or a stock market bear market is something that has to do with the stock market, which is similar but separate from the economy. So a stock market bear market, which is a downwards market, is when the stock market falls by 20% off of its highs. Right now, technically, we are not in a recession. We've seen an economic slowdown for 1 quarter. The first quarter, 2021, our economy slowed down and the stock market is down, but we have not entered a bear market yet. This is where a lot of people are saying that we should get ready for a bear market, get ready for a recession, but we are not there yet. But these are the things that you want to pay attention to. The second thing that I want to mention is what should you be doing? Because some people are talking about how they don't want to buy stocks anymore. The stock market is rigged. Okay, the people who make the most money in the markets are the people that don't invest on emotion and are the ones that look for opportunity. And opportunity tends to be where there's blood in the streets, when people are scared. When people are scared, they panic and they sell. Now this is where I want you to be a little bit smarter, a little bit more educated. Okay, if you're holding on to strong fundamental investments and you're not planning on retiring in the next few years, you don't need to be panicking. If you have 10, 20, 30, 40 years in your career ahead of you and you're holding on to strong investments, there's no reason for you to be selling unless you have a better investment opportunity somewhere else. You should only be selling if 1, you're investing in a company that's on the verge of bankruptcy, or if you have a better use for your money, or if you need the money in the near future. If you don't need the money, it's better for you to keep your money in the market for the long term. Now, of course, do your own research, but you should not be the person that's panicking and selling. Instead, you should be the person that when people panic, when people freak out, when people sell, that's when you want to come in and buy. Now, I know people are worried about what if this is the end of the economy? What if this is the end? Look, if you're worried about the end of the economy, if you're worried about the end of the stock market, then yeah, you should not be investing your money in the stock market. But if you believe that the economy will continue to survive and be here in the future, which I do, I mean, the United States economy is still the strongest economy in the world, and I think we will continue to be the strongest economy in the world. I think we have a lot of issues ahead of us, but I'm not worried about our economy ending or going away. So if that's the case, and you want to be a long-term investor, then what you need to be doing is 1, researching right now when times are okay. Find the companies that you want to invest in, do that research, and when you see a good buying opportunity, buy. So I've made a video recently talking about how I'm not actively buying stocks anymore. The reason isn't because of worries about the economy or worries about a downward stock market. It's because I have a better opportunity of me investing my own money into my own company, Market Briefs. So that's the reason why I'm not actively buying stocks. I'm still passively buying stocks. This is where every week I have money actively going into ETFs to give me exposure into the stock market. This is happening whether the market's up or down. It's a dollar cost average system. So you got to know you, okay? If you want to be an investor and you want to invest in individual companies, well, then this is the time right now for you to be researching the companies. Make a list, write it down. Which companies do you want to own? When you see these companies fall 10, 15% off of where they are right now, it's a great buying point. Come in and buy more aggressively as it goes down. And if you don't want to be the person that's doing all the research, then that's okay. Just know yourself. Then you can set up a dollar cost average system. find the ETFs, find the companies, find the funds that you want to invest in, set it up on autopilot. That way every week you're getting a little bit more exposure into these ETFs because you want to be buying on the way down. Nobody can perfectly time the market. We saw this happen in 2020, the whole time in March. And I can tell you this from personal experience because some of this stuff really was getting to me, where I was making videos during the stock market collapse, because that was the fastest stock market crash in the history of time. And I kept making videos talking about how I'm buying on the way down. I said, I don't know when the bottom is going to be. I don't know what's going to cause the bottom. There's no way to predict that. And I kept saying that as it goes down, I'm going to buy. If it goes down further, I will buy more aggressively. And the comments that I kept getting again and again and again were, why would you want to buy now? The market's still going to collapse. We're going to see such a deeper hurt in the economy, so it's going to go down way further. Just wait. Well, I kept buying on the way down. People kept saying that. And then the market turned around and it started to go up. And then the people that kept saying, wait for it to go lower, wait for it to go lower, missed the opportunity to buy. There's no way that you can predict the bottom. No one knows what's going to happen in the economy. No one knows what the Fed is really going to do. We know what the Fed should do. We talk about that all the time, but we don't know what the Fed is actually going to do. And so there's no point for you to try to gamble that. Know what you want, buy on the way down instead of perfectly trying to time the market, and understand that the economy and the stock market, while they're similar, they're still separate. So just because the economy is going one direction, let's say the economy is going down, that doesn't necessarily mean that the stock market is going up or down. The stock market is a place where investors go to bet their money based off of what they think is going to happen in the economy in the future. So they're similar, but they're not directly correlated, which is why sometimes you might see the economy getting hurt, but the stock market go up. And other times you might hear a good economic report and the stock market will go down. So you have to understand that they're not always directly correlated, but over the long term, that's where you will see the stock market correct over time. So you want to be a long-term fundamental investor, know where you're investing your money, and look for the opportunities. And you know what Warren Buffett says, buy when others are selling, sell when others are buying. When everybody's scared, everybody's freaking out, that's when you want to come and buy the opportunities. And this brings me to number 3. What is going to be coming in the economy? So I kind of hinted at this earlier, but the Fed has raised interest rates now twice in 2022. And they said that they want to raise interest rates multiple more times in 2022 and continue on into 2023. So that means 1, more expensive to get a mortgage, 2, more expensive to get a car loan, 3, more expensive for your credit card debt, and 4, more expensive for the national debt. So you can expect life or debt to become more expensive. Now, the reason why the Fed is doing this is to fight inflation. But the interesting thing about this, because you know, the Fed has been having these meetings about inflation again and again and again. And in the most recent meeting, the Fed said that the reason why inflation is so high is because of the supply chain issues, and that's why it may continue to get worse, because we have these supply chain issues going on in China and now with the Russian war. Those are the real causes of inflation. But what I want you to understand, okay, is 1, what is inflation? Inflation is when you inflate the monetary supply, and the entity that does that is the Federal Reserve Bank. In 2020 and 2021, the Federal Reserve Bank printed trillions and trillions of dollars. Now, part of this was in the form of stimulus checks, part of this in the form of bailouts, part of this was in the form of the Federal Reserve Bank buying assets like treasury bonds and mortgage-backed securities. So the Fed had printed trillions and trillions of dollars that they didn't have. They printed this money out of thin air, injected it into the economy, and now we are facing the side effects of this inflation. And if you remember, when 2020 happened, well, if you were subscribed to the channel back then, that's when I originally started saying that we are going to see an inflation problem because of all the money printing. And back then everybody said, no, we're facing a deflationary problem. How can we face inflation? Then in 2021, the Fed said that this inflation was temporary, it's transitory, don't worry about it, it's about to go away, it's not a real thing, it's just a short-term thing. Then in the end of 2021, that was when the Fed finally admitted that inflation may not be transitory. It might be around for a little while. And President Biden, in the end of 2021, he said that inflation will cap out at around 6%. We shouldn't expect it to pass 6 or 6.5%. I forget the exact number, but it was 6 or 6.5% that he said. Now here we are in 2022 with inflation at almost 9% now. And now the Fed is starting to get aggressive about inflation. We know that inflation is not transitory, but there are still blame games going on, that it's supply chain issues in China, it's Russia, all these things causing the inflation issue. So what I want you to understand is, yes, the Fed is starting to do things to fight inflation, but we have a long way to go. This inflation problem is not going to magically go away. And I know this is not a positive thing to hear, but it's the reality. This inflation problem is going to be around for a while, and unless we get more aggressive, it is going to stay around and it's going to continue to impact the economy. So there's a lot of issues, and I'm not saying this to be an alarmist. I'm saying this for you to be aware that way you can take better care of your finances, because the Fed is not going to admit it, but there are real issues with inflation right now, and the cost of living is going up. And things will continue to get more expensive unless the Fed gets unless the Fed gets more aggressive. And as the Fed gets more aggressive, it's going to hurt the economy. Now, what does that mean? Well, if interest rates go up, it becomes more expensive to operate a business. That means businesses may have to reduce the size of their companies. You could potentially see layoffs. So there's a lot of things happening that you want to pay attention to. Now, before I get to number 4, the easiest way for you to stay up to date on what is happening in the economy and what's happening in the finance and business world is just to subscribe to Market Briefs. It is a free financial newsletter that I created. My team works every single day to break down exactly what's happening in the finance and business world into a fun, easy to read and witty newsletter. You can read the newsletter in less than 5 minutes every morning. It's completely free, and I promise you, you're gonna love reading this newsletter. I have had many people tell me that this is the only email that they look forward to reading every single morning. It's super fun, and it breaks it down in an easy to read format. So if you want to subscribe to Market Briefs, I'll put the link for you down in the description below. And this brings me to number 4, which is, how do you prepare? Well, there's 2 aspects to this. One is, how do you continue to survive? And the second is, how do you continue to thrive? On the survival aspect, make sure that your family is okay. You know, that might be the job that you have. Make sure you have a stream of income. Make sure you have some savings cushion. Even though we are in a high inflationary environment, you want to have some savings to protect you and your family from really anything, because, well, the prices of things are still going up. Hopefully, they will not continue to go up at the rate that they are now, but they are still growing relatively fast. I was actually talking with a couple business owners in 2 completely different industries. One was in the automotive industry, one was in the healthcare industry. Both of these business owners were talking about the exact same thing, about how inflation is affecting their businesses in such a severe way, where the cost of their products have gone up so much higher than the price increases that they've been able to push down. So that they've felt their margins have been shrinking because they have to pay so much more for their raw materials, and they're struggling now to push the price of their products down. So now the company's having to eat up these extra costs, and they don't know what to do. They're hoping that this is temporary, but this is the troubles that they're facing right now. So that's kind of the one end, where, you know, make sure you take care of yourself, be ready for really anything. The second side is be ready to thrive. Look, if we enter a recession, if we do enter a bear market, just remember that more millionaires are made during recessions and crashes than any other time. So what you want to do is you want to be the person that can take advantage of these opportunities. That means having that cash, having that money ready to buy. That means when you find an opportunity, when you find something that you want to purchase, use a down market as a time to buy. Look, people are going to think you're crazy. When I was buying real estate after the 2008 crash, for pennies on the dollar, everybody thought I lost my mind because real estate looked like such a bad investment. But you have to do that fundamental analysis beforehand, know what it is that you want to invest in, know what you want to buy, do that research, understand that, of course, it's risky when you buy when it's low. That gives you the opportunity to buy. If it goes lower, you can buy more aggressively, but you have to be patient and you have to be willing to do that research, because, you know, there is risk that if you buy something, that it could go to nothing. That's the reality, especially when you're in a downwards market, which is why it can be more difficult. But this is where you need to be investing your time and money into that financial education. That way you can be one of the people that profit, instead of just being one of the pawns in the system that keep getting screwed over by this system. And unfortunately, that's what most of us are taught to do. I'm trying to help really just provide that financial education because this is what the people need to understand, because the majority of people are never taught this. Most of us don't grow up with rich parents to tell us this, and schools don't teach us this, and well, the system doesn't really want us to know. So this is where you need to be educated. That way you can make better decisions for yourself. That way you can become wealthier if things continue to go down. If you enjoyed this video and you want to see how much worse housing affordability is going to be, I made a video covering it and you can watch it by clicking that button right over there. Thank you for watching, and as always, keep hustling. 60% from $1,645 to $2,684 a month, and that's not including the higher property taxes that you're also going to have to pay, because now your property taxes are going to go up